All right. Here we go. Good morning, everybody. It is time for the market to open. Let me tweet this out into the world. Let everybody know that we are indeed live. Live market open. We've got a red pre-market. Particularly because Tesla earnings were not, I mean, they weren't bad, but they weren't amazing. So Tesla is obviously red in the pre-market. And we're going to go through a lot of other things that are going on. It is October 20th, 2022. We have 11 days left of October. 11 days, not a lot of time, but we're here. Morning, Legend Samuel. Good morning. The head of Lettuce live stream outslasted the new British PM. Markets went green on news over her resignation over in the UK. Yeah, the UK stuff is also very interesting. How are you, buddy? Not as been as active on here recently, but my own YouTube grind, but good to see you. Doing good, man. Doing good. Just grinding. That's it. Just grinding. Gotta just keep grinding. All right, let's open up Webull. Check out what we've got going here. See where we're at in terms of the markets. We'll keep going from there. Obviously, we are red pre-market. Not horrible. Well, it's not a crazy red, but it is a decent red. Tesla is the big news. And we covered it in the market close yesterday. Tesla's at 209, down about 6% pre-market. So it's down pretty rough, 6% on Tesla. S&P is actually up a little bit in pre-market, 0.04%. So Tesla's performing inversely to the S&P, which is quite interesting. Palantir down 0.44% to 788. Obviously, Palantir got a major deal yesterday from Hertz, but still, Palantir is down on that news. Netflix is down about 0.7%. Facebook is up a little bit at 0.27. NVIDIA at 120. It was at 109. That was where its lows. NVIDIA's back up, $300 billion market cap. Google at $100. ARK at 35. It's down a little bit in the pre-market. Microsoft, wow, I didn't even know Microsoft was at 236. I thought Microsoft was at 250. Microsoft at 236. Okay. So yeah, I mean, regular stuff that's down. Good morning. My broker added Ginkgo. Time to start a small position. That's very cool. What would you say was the thing that made Tesla go down the most? Well, I mean, their forward guidance was pretty good. I think the lack of beating on earnings per share. I mean, people thought the beat would be like $1.20 off of an expected $1 for earnings per share, and they only did $1.05, which is good. It's not bad, but it's not like amazing. And so, in this macro, if you're not like, killing it, it's really difficult if you're not like absolutely destroying it. So, I mean, I can understand why the market chose to do what they wanted to do. It's the market. But even if Tesla had killed it, I don't feel like the market would have respected it at all, personally. I'm just here for the cowbell. I appreciate you, Crossroads. Charles Allen, what's up? Yeah, I think like even if Tesla did amazing, the macro would have still hurt them. Or even if they rallied on a day, the macro would have just took them back down a little bit after. So honestly, it's not like the craziest thing. Stevie says Elon having to complete the Twitter buyout by 20th October is probably the cause of the Tesla. Yes, the Twitter stuff. This is also true. I mean, so I don't know if Elon needs to literally sell stock for him to do this thing, or if he's going to get debt equity financing, because he had people to get debt equity financing, and he already sold $8 billion of Tesla back in April. So I don't know, but if he has to sell more, obviously that's going to not be the best. Samarth, what's up, Amit? What's up, man? Practical investing. AT&T is running. Is AT&T running? AT&T, wow, it's up 5%. Not bad. Yeah, AT&T is one of those divvy stocks. Been around for a while. AT&T, it was at $30 for a good amount of time, or at least $24, $25. Obviously, it's been crushed as well. Now down to $15.44. The 52-week low on AT&T is $14.46. Yeah, it's one of those stocks you have in the portfolio and just enjoy the dividends. I think it has like a 4% yield, if I'm not wrong. I might be a little bit wrong on that. I'll have to check on that. I want to go to CNBC and see this UK news that's come out. Let's share this real quick before we get into the market open. UK Prime Minister Liz Truss resigns after failed budget and market turmoil. On September 23rd, Truss Finance Minister Kwasi Kwarteng announced a so-called mini budget, which caused a turbulent period for UK bond markets. Most of the policy reversed 3 weeks later by the second finance semester. We set out a vision for low tax, high growth. Wow, this is so interesting. The party is now due to a complete leadership election within the next week. Graham Badley, see, I'm not in the UK, so I don't follow UK politics that clearly. But it's not. I mean, just imagine if people were resigning in the United States from like. Imagine if Jerome Powell was resigning. That'd be crazy, bro. We'd be like, come on, Jerome Powell. Like, imagine he's just like, yeah, I'm leaving. I don't really care that much about this. Like, that's kind of wild, bro. To just resign and leave. It's an interesting thing. Richard, I'm here. What's up? What's up? Amit, with Palantir TAM currently at around 15 to 20 billion, I believe, how are they working out this TAM for the amount of industries they're working? Should this be higher? So their TAM is not 1520. Their market cap is 1520. Their TAM, they've said, is 120 billion. But I think all of us have pretty much scoffed at that. We think their TAM is a lot higher than 120 billion. I mean, I think that's the good part of their sandbagging, because their TAM is probably closer to 500-600 billion. But, you know, honestly, I think the TAM is in the trillions. Just given where you think data analytics is going over the next 10 years. So I think it'll be a lot bigger. We'll see. Complete clown show here in the UK. Miyoko, what's up? Why only 3 likes with all these viewers? Tom Nash voice. It's a clown show everywhere around the world at the moment. I agree. $120 trillion TAM. Yeah. They just messed the T with the B. That's the only problem. Soon, AT&T, Comcast, and Verizon are going to be dinosaurs. That is true. The problem is that they control most of the telecommunications for the entire world, to be honest. AT&T, well, not at least the United States, maybe not the entire world. I know in India, there's some other services. I have Verizon. I used T-Mobile when I was younger. I used AT&T before I had Verizon, like 4 years ago. So those services have been those services. I mean, in the United States, I would wonder who doesn't have one of those services. AT&T, T-Mobile, Verizon. Like Sprint is part of T-Mobile now, right? So if you need cell service, it's those 3, and that's it. All right, we're about 40 seconds away from the market open. We're going to see what happens today. Obviously, things are red. I don't know if today's a buying day. Today's a wait day. We're going to see. We'll see. PS, Amit, what's up? Out of curiosity, how's Coin doing? We'll look at Coin in a little bit. Twitter is better at live stream notifications than YouTube. Freaking YouTube, man. Did you see the CNBC closing bell interview with Carpenter? Yeah, I saw it last night, actually live. I saw it live. So I'll probably do a reaction to it today on YouTube, but I saw it live. It was really good. All right, here we go. It is October 20th, 9:30 a.m., and the stock market in the United States of America is now open. Wake your ass up if your ass is not up, and let's look at the stock market. Tesla dropping 6%. If we get Tesla under 200, I will buy today, but let's see. Let's see if we can get it there. I would actually really welcome that, because that would be a good opportunity for me. S&P at 368, Palantir 777. We got Ginkgo at 241. Ginkgo might have more to fall. Someone in the comments asked, what do you think about the CEO's high salary? I think stock-based comp is stock-based comp. You know, they have to have it. And also, the founders of Ginkgo have not sold any shares outside of tax vesting purposes, so they're not really selling out at all yet. And I think they recognize how dumb it is to sell at $2.40. So, you know, remember they IPO'd at like $15. So I think Ginkgo's got a long way to go, but I'm still waiting for a better entry price to get in. They've been making amazing deals left and right with Bayer and Zymergen, so a lot of good stuff has been happening. Meta at 133, Nvidia 121.98. So a couple of those stocks are up. Microsoft 237, AMD 57. That's up. Uber 27. That's up. Baba 72. That's up. Spotify is down a little bit, 88. Coinbase 63. Coinbase recently is coming out with a coin documentary. Have you guys heard of that? They're making like this media around cryptocurrency. I guess that's interesting. At this point, no one cares about crypto right now. That's the problem. Enphase at 240, Bitcoin at 19,000, right? So if people don't care about crypto, no one's going to care about Coinbase. That's the inevitable truth around, what's going on in the markets in the crypto world. If you don't care about Coinbase, you're not going to care about NFTs. You're not going to care. It's all part of the same thing. NEO up a little bit, 3% today as well. So if you don't care, you don't care. And that's it. Cows of Wall Street. Here we go. What's up, Amit? Where's the leather coat? It's downstairs. I gotta go downstairs to get it. DRK, what's up? Scott, what's up? We already lost money a long time ago. That's true. Let's watch Tesla all day long on this stream. Let's just stare at Tesla go down. All right. Let's hear some analysis on what's going on in the markets and what's going on with Tesla. Get some looks at what's going on. All right, here we go. Let's do AT&T Q3 earnings beat. So that's why AT&T went up 5%. Interesting. All right, let's hear this one. The Fed is beginning to slow down the economy and inflation. Let's hear this one.
Talk about it, because while the numbers were better than expected, fair to say that the tightening financial conditions have forced things to decline in many ways and made it a little bit harder to sell stuff. So where are we? We always sort of use you in a way as sort of a fascinating proxy for the global economy.
Andrew, it's great to be with you. I'll start with the quarter for us, which was pretty remarkable. Obviously, the market's backdrop was really tough, but we protected capital for our investors, and that's the key. We delivered outperformance. It's a function of the fact that we've been anticipating inflation for some time, and I think we've done a really nice job in sector selection. A lot of exposure to energy infrastructure, to travel-related businesses, to global logistics, to floating rate credit. That allowed us to outperform. That outperformance continues to lead to inflows. So we had $45 billion in the quarter, $183 billion year to date, a record for us over that period. And as you pointed out, the financial results.
This is Blackstone, by the way. So that's the president of Blackstone.
Despite the challenges, very strong. Fee-related earnings up 51%. It is a much tougher environment. We should talk about that, but we're pleased with our performance.
Life is relative, and you're doing well on a relative basis to what is increasingly a tough environment out there. You've had to mark down the value of a lot of the assets. Just speak to, though, where you think we really are in terms of, I don't know if you want to call it a ball game, but what you think is happening in the economy.
So I guess I'd start by saying the Fed, I believe, is beginning to have success on its goal to slow the economy and slow inflation. At the same time, there's still a fair amount of momentum in both. If you think about what's going on, think about the Fed almost as the doctor administering a shot to the arm of the economy, basically trying to slow things down. The immediate impact has been in capital markets. Stocks have gone down by 20+% this year, bonds by 15+%. Credit markets have tightened a lot. That's begun to move to sort of the rest of the economy, starting with the capital side of the economy. So the good side slowing. We're seeing container shipping slow down in our portfolio. The furniture business is slowing. The for-sale housing business, when you have 7% mortgage rates, that starts to slow down. Now, as you move deeper into the economy, you still see a lot of strength, as I mentioned, in travel. Unemployment today is still only 3.5%. But when you talk to our companies, what you're seeing is they're becoming more cautious on their hiring plans. They're thinking about spending less in terms of CapEx. And so you can feel things start to slow. And the Fed policy does work with a lag. I was talking this week with a very large apartment developer who has 15,000 units under construction. His budget 6 months ago was to do another 15,000 units in 2023. He has now shelved 75% of those units. And so when you think about the workers there, unfortunately, next year is going to look a lot tougher. So I would say this slowdown is working its way through the system, but it takes time.
Watching.
Okay, so we're gonna watch this next one coming up. Let me go to the market real quick though. Let's see where Tesla's doing. The Fed is doing what it needs to do, as the Blackstone COO just said, which is start to reduce or to slow down the economy and reduce inflation as a result of. I mean, obviously, right, from a macro, the economy has to slow down in order for inflation to slow down, which is why I think it was, we can't expect Tesla to have a crazy run up, because that means people are buying, and the Fed does not want people to be buying. The Fed doesn't even want people to have a job, sadly, right? Like, they want to induce a pseudo recession, as soft as it could be, in order to reduce inflation. So that's why I feel like any rally for Tesla didn't make sense. We're at 204 on Tesla. This is why the Netflix story doesn't make sense to me at all. I mean, Netflix is up 14%. For Netflix to sustain this momentum in a market that is incredibly red, it's weird to me. I wouldn't be surprised if people buy puts on Netflix just for it to go back down to like the 230 ranges. Because if the S&P goes down to 3,400, do we still see Netflix at 270 just because they added 1 million more subscribers after losing so many subscribers the first couple quarters of the year? Like, I don't know. And I don't think the growth story is still finished for Netflix. They need to have like immaculate amounts of content, an abundance of content, in order to keep growing. That is going to cost a lot of money. Like, it's not that easy, right? So I'm not sure exactly where the Netflix story is, but I do know that it would be crazy to see Tesla run in this type of market, given the Fed wants people to stop buying. We're at 205 on Tesla. Let's see if we can get even lower, to get down to below 200. But we're gonna see. That's where I start buying. I know 180 is the last support, or the biggest support. So all right, let's take a look at this one right here. Tesla is facing a potential pain if there is a recession.
What we saw with the stock this overnight and then this morning too. What do you think the disappointment really comes from? What was the street hearing or not hearing on the call?
Well, if you're a growth stock story and the company is saying they're not going to hit their target of 50% growth this year, then you've got a problem, right? Now, there's a lot of positives there if you're a long-term view, if you're bullish, near record profit, more free cash flow than expected, these other things, and the potential buyback for next year. But in the interim, potential pain, especially in China, especially if there's a recession.
You said that it sounded like Elon and some of the other managers were a little defensive on the call. Why do you think that is?
Well, I mean, if you look at the results in the past year, near record results and profitability in the last 3 months, generating cash flow that just a few years ago would have seemed highly improbable. These are kind of huge, ambitious targets that they've reached. Yet this is a company that has huge expectations. And if you're not meeting those already high expectations, then you're going to get punished in the market. Remember, it was Elon who earlier this year was saying that deliveries could rise 60% this year. So the fact that they're not going to hit 50% is troubling to some.
Let's talk about one of his latest kind of targets. I don't know if you call this a target or just a prediction, the idea that the stock for Tesla could be much more valuable down the road. Let's listen into what he had to say about future market valuation.
I'm of the opinion that we can far exceed Apple's current market cap. In fact, I see a potential path for Tesla to be worth more than Apple and Saudi Aramco combined.
So that's a big number. You don't often hear predictions like that from CEOs. But again, Elon Musk is somebody, as you mentioned, Tim, who will make some pretty bold predictions. How do you think that sat with people who were on the call?
Well, it's like Babe Ruth, right? Pointing to the stands. And it's not the first time he's done it. He did it a few years ago, saying that Tesla was going to be as big as Apple. And Apple at the time was, $700 billion. And they ultimately did it, in the last few years. But at the time, it seemed rather audacious and rather ridiculous, if not insane. And here he is doing it again. Now, The challenge here is in order to do that, he's building in the math that this is going to be a company that's more than just selling cars, more than just selling solar panels, more than just selling battery packs, that it's going to be a leader in autonomous cars, but also a leader of robotics. And that robotics part is where some kind of question the near-term capabilities of the company. It hasn't quite demonstrated that it can really do everything that it has said or promised it can do. So that's the challenge. I think some watching those numbers being thrown out tend to roll their eyes on it, but the faithful are going to be along for the ride.
What about any questions about Twitter? It did seem to kind of make it sound like he's ready to do this Twitter deal.
Yeah, absolutely. Absolutely. One of the things I was just kind of surprised that he engaged on that question. Traditionally, Elon likes to avoid talking about other businesses when he's talking about a Tesla call or doing something with SpaceX. So clearly wanting to get the message out that he's ready to go on that, even if he's overpaying, which is what he said. It sounds like perhaps we're getting close to having this rolled up, if you will. And I think the market is looking to see, is he going to have to sell more of his Tesla shares to fund this deal? We'll be able to see in the next few days, perhaps. Probably why he's also talking about buybacks for next year to give long-term investors a little something to be excited about for 2023.
Okay, so a lot of things talked about there that I want to discuss. First is the Saudi Aramco Apple stuff. I believe this was Elon getting shareholders excited. Wow, Tesla at 202. Damn, it's down. I don't think Elon was lying about this, right? I think the reason he was saying it should be it should be bigger than Saudi Aramco and Apple is because if you really factor in Tesla and what they can do, like, there's a lot of potential, especially when the bull market comes back, and there's no reason the cult of Tesla and retail shareholders and institutions, when they get excited, and the bot and full self-driving and the SaaS business, the insurance, there's the energy, there's so many things there that could get it up there. So I don't think it's crazy for him to say that. Obviously, it's going to require phenomenal execution. But it's not insane for him to be like, yeah, there's definitely a way for us to get there. We just have to keep trying and keep going and figure it out, right? So that's the first thing about Tesla. The second thing is the Twitter stuff. Look, I think that he's making a bad deal with it, but he realizes he has to do it, and his lawyers probably told him there's no way he gets out of it, so he's going to do the deal. And when he gets Twitter, it's just a question of, does he have to sell more stock, or does he get debt equity financing to be able to finance it? And no, I don't think anyone of us know yet, but we will know pretty soon, like in 8 days, right? Meta at 134, by the way, Nvidia 123. So some of the market is pretty green right now, whereas Tesla inversely is red. And I think his argument about the deliveries as well, them not hitting 50% deliveries, is also another reason why the market could be taking them down. But the Twitter overhang could also be, something the market does not like. And that's why they're punishing them. What's up, everyone? Ricardo, true believers will be rewarded. Yeah, I mean, that's if you believe in the long term, Elon's rewarded everybody else. Amit, I need you to promise that if we hit 199, we do a celebratory buy together. I got it. If we hit 199, I'm definitely buying today. I think he's trying to pull engineers from Apple so they can work for AI on Tesla. That's also a good point. He's juicing up the Apple folks a little bit. They're like, hey, you might want to come here because we're going to be worth more than Apple. Well, you got to think about the Apple comparison as well. And shout out to 200 people being here. Appreciate everybody. Apple is like, what is Apple right now? Because again, Apple, the iPhone is not innovative anymore. And I don't blame Apple for not innovating on this phone anymore. This phone is this phone. Like, I don't know how much more this phone could get better. So what is Apple's next growth curve? I mean, really think of it. What is Apple's next growth curve? Advertising, even if it is advertising and they put ads everywhere on the phone, first of all, that would ruin the relationship with their users. But that's like maybe $100 billion market. That's not that exciting. The car is not happening. And if it is happening, it's not going to be better than Tesla. The metaverse, maybe. And if Facebook doesn't win at it, why would Apple win at it? I think that's a general consumers don't care about it type of problem versus a company problem. So, NASDAQ. Oh, I thought that said NASDAQ 10,990. I was like, we're about to get 11,000. No, it's 10,690. But we are green on the NASDAQ today. So in general, Apple doesn't have that's why I'm also not excited for Apple stock. I mean, obviously I think Apple will rally, but it kept hitting resistance at 178 because the market was like, why do you deserve to be a $3 trillion company? Right. And there's no real reason like the MacBook, the iPad Pro, like Apple's growth has happened. It's got to 3 trillion. They really need to find something else to get them to grow. And it's a hard thing, right? Like if I was running that company, that's like, what product do you create that gives you another $1 trillion worth of value? And for Tesla, it's like, it's obvious the products you create and the services you create and the technology you create to get to that next couple trillion. Like it's obvious what they would be able to do. Apple Watch and health is great, but I just don't think that's like a $1 trillion industry. Admit you're forgetting the real money maker, the closed garden. They own it all. Who cares about the phone? The user is leaving the garden. That's fine, but once I'm in the garden, I've had this phone for 2 years, and so how are they going to get me to buy? I mean, yeah, they'll. And if I want to buy a new phone, by the way, Verizon's giving me like $500 off. So, I mean, being in the ecosystem does not mean your lifetime value increases. Is my point. Especially if I buy apps on the iPhone, that app, like if I download TikTok, Apple's not getting any benefit of that other than I'm using it on my iPhone. So I don't know how much they monetize from there. Apple just copied Samsung's best ideas 1 or 2 years later, and now people still buy the phone. No reason to do anything innovative there. Yeah, I would agree. Apple will provide software apps for cars, but it will not build a car. Yeah, I agree. And again, I don't think that's a huge $1 trillion market. You can provide software apps for cars, but that's not revolutionary. That's not changing the interface. Like Tesla is going to be doing something revolutionary. Apple is just going to be an app store, you know? What Tesla can sell to the masses like Apple, like something that almost everyone can afford, a car. If they figure out how to get a Model 3 down to 25,000 with full self-driving, or if they figure out full self-driving and cars can pick you up in robo-taxis where anyone can pay $10 for like a pseudo Uber, and Tesla monetizes that on the back end with their fleet of vehicles. I mean, like, transportation is the biggest thing to sell. I mean, electric airplanes, electric ships. I mean, there's just so, I know I'm spitting stuff out there, but the potential of Tesla, even if it sounds crazy, is not as crazy as saying Apple, is going to build a car. It's like, that's crazier to me because we know Tesla has the ability to do it. And we kind of trust Elon and SpaceX, and like, we could do a lot of different stuff, right? So I think Apple could potentially do it. Apple is hiring for the Apple car team. Yeah, we'll see how good the Apple car is. It's like, who cares? Tesla will sell every car they produce for at least the next 10 years. I agree. And that's why I think Elon's not crazy for saying that they can increase the market cap of Saudi and Apple combined. Something nobody's talking about Elon is FSD being 100% successful now. Yep, that's another thing. He did mention that in the interview. Also, the Apple car, even if they do it, right? It's like, how good is it going to be? Like, it has to be electric because they're not going to use a gas car, right? Apple wouldn't do that. And it has to be autonomous. Who has the best autonomous software in the world? Tesla, and because they have all this proprietary understanding of mileage, because they have all these cars on the road training their AI models. So it would be hard to imagine that, Tesla takes it over. All right, everybody, I got to go. Thank you so much, 203 people, for being here. Appreciate you. I know I wasn't able to do the market open the past 2 days, just didn't feel the best, but I'm here. I'm back. Hope everyone is doing well. I have a podcast coming out today. I've interviewed someone who has 200,000 shares of SoFi. So for those who are interested in SoFi, that podcast will be out. He's an old retired hedge fund manager, and it was a pretty good podcast in my opinion. So thank you all for joining. Check out the link in the description. Sign up to my startup if you are interested. I would love to have your feedback. I will see you guys later throughout the day. Bye-bye, everybody.